Hello everyone, this is Ryan with Numbers Up Finance. I just want to do a market wrap for Wednesday, March 20th, 2019. Just taking a look at the daily charts for SPY today. Make it really quick. Just a few things to cover technically speaking. It was a difficult day because we had the FOMC meeting at 2 p.m. and 2:30 we had the press release that followed. And, for anyone that's been investing a long time or even a short period of time would know that the FOMC meetings always bring an extreme, swing of volatility either way. I mean, it's honestly pretty unpredictable. There was 99% certainty that the interest rates would stay the same going into today, and, they stayed the same. And what you saw was a bullish push-up, it was about a % spike up around 2 o'clock to 3 o'clock. And at the end of the day, you saw a return to normalcy. So we were steadily moving down all day. We pushed around 280 price points, and then we pushed back up to 283 at one point. Of course, it was a false buying signal. It happens all the time, and it's just noise in the end of the day. It was nice to see us settle the dust at the end of the day and head back into hopefully a normal trading session tomorrow. So if we take a look at the daily charts, we're still watching this 281 resistance level. We've been tugging at it for weeks now. And we had a pretty clear break above it in the works yesterday, the 19th. But we not really hold above it with conviction. We didn't break above it with conviction at all. Actually, the FOMC meeting lasted 2 days, if I remember correctly. So, around the end of the day yesterday, we had extreme selling off, and that followed today. So it was a really nice sign, though, especially if you're looking at the market long-term bearish, because we started to push below this resistance level. We tagged above it at one point, but we haven't taken it out with conviction yet. So, again, this is still the price point to watch. But this is SPY on the daily charts. You can see we've had a little pop of it, and, we went back down today to test the level and hopefully break through it. And that FOMC meeting, that false push-up, was the reason we didn't take it out with conviction today. I see more downside coming for the end of the week, and hopefully we can go down to test these lows down here. Let's take a look at the 4-hour charts for SPY as well. We can get a clearer picture of what's going on. You can see we tested this point 3 times back in 2018. Didn't break it once, and now we came back up and we tested it multiple times. So what I saw to be happening actually at first, I thought we were breaking it, coming back and back testing. This is a pretty solid line to be drawn, around 281.50. To me, it looked like we took it out, we back tested it, and we were coming out, and if had we have back tested and pushed up, that would have reopened the bullish case so nicely for the long term. But we took it out today, and we were really taking it out strong. And you can see this 4-hour candlestick here. It's so out of line compared to the other ones. This is simply because of the FOMC noise. And it's why you still have to pay attention to the way the market's actually moving. So seeing a return to normalcy all day, at the end of the day, was nice. It opens up the trading session for the rest of the week. Still watching in the short term this trend line here. This is something that's now been tested 3 times, including today. This was tested before the FOMC noise came out. It was something I was watching around 1:30ish today, and tested it very perfectly, very nicely. The tail end of this candlestick kissed off of it, and we started to push back up. And as we got into the 1 p.m. hour, or 4-hour stick rather, we had that noise push up. So if tomorrow's trading session we push right through it, or actually even overnight we push through it, then that's going to be a strong sign, a good check mark for the bears rather moving forward. And of course, we just want to keep longer term, or midterm rather, want to keep an eye on this line down here. This is one of the targets I have laid out. It's not my only target, but it's just one of them. This is our 262 price point level. Let's just keep an eye on that because, it's such strong support that we're going to be coming up on hopefully soon, if the bearish case plays out. And, if we take that thing out without really thinking twice, if we take it out with conviction, then by all means, the bearish case is looking much stronger by the day, especially for the longer-term recession that could be impending. So keep an eye on that, and look for a break of this trend line as well. You can see it on the hourly chart just as clearly over a 90-day span. So, definitely keep an eye on it moving forward. And we'll close it up with the weekly charts. Same deal here. On SPY, I said going into this week, I set up a long-term price video with a risk-reward actually for a long-term shorting opportunity is like 50 to 1, 25 to 1, depending on where you set your stop. If you're trying to short, that is. And listen, I said in a long term, if you were to short the market right now, the only case you would stop is if we had a complete close above this this resistance line we've been at for weeks with absolute conviction. And I mean a candlestick pretty much 100% above this line. That would require closing the week around 285, 286, what have you. So by all means, that opportunity, that 25 to 1 long-term risk-reward opportunity is still on the table, and it's probably at its strongest right now. So by all means, it's still there. We are not taking this thing out with conviction on the weekly charts. This bearish engulfing candle that happened happened 2 weeks ago, although it wasn't confirmed the following week, it doesn't mean the bearish case is dead. So keep an eye on how this weekly chart's going to close. We're flat on the week right now, but we still have 2 more trading days, and the momentum is definitely shooting towards the downside based on how we traded today prior to the FOMC meeting. And I would like to end this, actually, one more thing I want to cover. This is slash VX. This is the future for the volatility index. All you need to know about this is it performs inversely to the market. So when this is going up, the market's going down. So if you need an indicator of, something that appears to be going up, here we have our volatility index. So I mentioned, it was about a week ago, actually back on the 12th, you can just see by the date there. I made a video saying that it could have been time to long the VIX, to get a position in the volatility index, because we've had this channel for quite a long time forming. It's had so many reactions. This is about to be the 5th reaction off of it, and then that didn't happen. We got to close above this line. You had an opportunity to enter, set a stop loss below, and it didn't play out, and you saw strong selling off of it afterwards. So 2 days ago now, we had this gap in the futures that didn't actually correlate to prices on the ETF, but the futures still gapped nonetheless, and here we are trading between this channel again. Now, this could be an opportunity for an island cluster, mind you, if you're bullish in the market, so by all means, take a look at that. We could gap down again and match these prior prices, but what I see is on the momentum indicator, we have a very nice bullish divergence forming. And if you go and back test the VIX, especially in the 4-hour chart, mind you, bullish divergences play out for incredible explosions in price. So, that we have one forming on the daily chart now is such a nice sign. So, if you're setting, even if you're not in the volatility index right now, if you still want to get in at tomorrow's open, whatever the case may be, set a stop below this line. The risk to reward is still in your favor by all means, and you're talking You're talking a solid gain of about 15-16% here if we test the upper side of this channel. And again, if we're entering a longer term recession, we're going to break above this channel line for sure and start testing these higher levels for the volatility index for sure. So but yeah, that's pretty much about it. There'll be more developments tomorrow. I'll be interested to see how the markets trade tomorrow without any type of external factors influencing it. In the meantime, just remember to get your numbers up, and happy trading. This has been Ryan with Numbers Up Finance. Thanks for listening.